The services index has remained above 50 for nearly 30 months at a stretch, the longest such trend since August 2011. On the power sector front, peak power demand remained at high of 221 gigawatt in October before declining towards the end of the quarter. This was after a record high of 240 gigawatt in September recorded this year. Electricity consumption during Q3 24 recorded at around 380 billion units, saw an increase of 10% on year-on-year basis. States like Uttar Pradesh, Maharashtra, Gujarat, Madhya Pradesh, Karnataka and Tamil Nadu remained drivers of the surge in demand in power. According to the CA estimate, electricity consumption is expected to continue to increase at a CAGR of 6 to 7% over the next 8 to 10 years. Looking at trends in demand and its expectation in the coming year, recently in November, Honorable Minister of Power Sri R.K. Singh Ji spoke about the need for thermal capacity addition to meet the increasing peak load in the country. The minister was of the view that due to increasing electricity demand in the country and the prevailing demand-supply situation, the required thermal capacity required will be about 283 gigawatt by 2032. And against this, today we have installed capacity of 214 gigawatt. Already 27 gigawatt of thermal capacity is under construction, and government has decided to add another 50 gigawatt of new thermal capacity that will help in meeting the growing demand of the power. It has been also proposed to add good part of this capacity for sales through the market, as seller will be able to get adequate return by selling through the exchanges, and capacity addition can be done faster without the need of PPA. The minister also mentioned that huge amount of funds will be necessary to create such capacity, and it is believed that REC and PFC will finance a large part of this. Additionally, the minister noted that country's requirement for 24/7 availability of power requires a double engine, that is renewable as well as thermal capacity. With 180 gigawatt of renewable installed capacity, India remains on track at its target to achieve 50% of the capacity from non-fossil fuel sources by 2030. In addition to this, 140 gigawatt of the green energy capacity is under tendering and implementation, and this is all above the government target of 50 gigawatt of RE capacity that government is planning to add every year till 2030. To enable power integration, the NEP has projected a storage capacity requirement of 74 gigawatt by 2032, consisting of pump storage of 27 gigawatt capacity and battery-based storage of 47 gigawatt. Recently, under the government's viability gap funding plan, the SECI has awarded India's first pilot project of 500 megawatt battery storage system, wherein 40% capacity is open capacity for sales to the market through the exchange to meet the peak hour demand. Additionally, there is a government push towards green hydrogen mission. The push for green hydrogen of 5 million ton per annum by 2030 alone would require 125 gigawatt of green energy. On the fuel side, during the quarter, India's coal production increased by a robust 13.1% on year-on-year basis, and the production level was these are almost about 256 million ton. Coal dispatch to the power sector increased by 11.7% on year-on-year basis to 203.5 million ton. E-auction coal premium has continued to decline since the beginning of this financial year. The coal premium under Shakti B8 auction has come down to almost about 40% now. Coal inventory as on 31st December 2023 stood at 13 days. The imported coal prices have also come down. For 4200 GR coal, last year the prices were almost about $90. It has come down to $58 per ton. Another good thing is imported gas prices have also reduced significantly. Last year, imported gas prices were in the range of $20 per ton, $20 per MMBTU. Now they have come down to almost about $9 per MMBTU. And if the prices come down to $7 to $8 per MMBTU, the variable cost for using the gas will be only about 6 to 7 rupees. And I'm sure almost 11,000-12,000 megawatts of the gas-based capacity which is available in the country, that can be put to bar for meeting the peak hour demand. We are now witnessing a scenario wherein there is no fuel shortage. On the exchange, the improved supply side scenario has resulted in increased sell liquidity since November. Sell bids in collective auctions increased by 25% on year-on-year basis in November and 18% in December. This led to easing of prices on the exchange. The average market clearing price in the DAM market was 5 rupees per unit compared with 5.88 rupees per unit in Q2 of this year. On the regulatory and policy front, the regulatory and policy environment continues to be conducive for power market development. Let us now talk about the noteworthy regulatory updates and policy initiatives for the sector. CERC has implemented the Indian Electricity Grid Code, the sharing of interstate transmission charges regulations, and long-awaited GNA regulations from 1st of October 2023. The salient features of these regulations are, which are market-friendly, the long-standing anomaly in transmission charge between collective and bilateral transactions has been corrected now. With this, during the quarter, we witnessed a reduction in volume in our day-ahead contingency market and consequently witnessed an increase in volume in the day-ahead market. Volume in the DAC market in Q1 was 2 billion units. In Q2, it was 2.6 billion units. It has now reduced to merely 0.4 billion units. And transactions have now shifted to the DAM in the DAM segment. At nearly 15 billion units in Q3 volume for DAM, this was higher by 17.5% as compared to Q1 and 30% as compared to Q2 of this year. This trend is expected to continue in the future also. Under GNA regulations, transmission charges in collective transactions will be applicable only for the buy quantum in excess of their GNA. Buyers will be able to utilize GNA optimally by buying power in the DAM and RTM market. Under IGC, generators with long-term PPA would be able to sell their URS power not requisitioned by the beneficiaries in the day-ahead market without the consent of the buyers. Similarly, in efforts to bring URS power in the market, Ministry of Power has proposed amendment of late payment surcharge rules which mandates generators to offer URS power in the market. These rules also provide for penalty in terms of reduced fixed charges to GENCOs if they fail to offer URS power in the market. This will improve sell-side liquidity in the exchange platform. Generators are now allowed to purchase in the DAM and RTM market to meet their supply obligations in case of shutdown or the forced outage. Interstate transmission charges and losses will now be only applicable for buyers. This will provide a level playing field for all generators irrespective of their location and will facilitate competition on the exchange platform. These regulations will also facilitate energy transition in a big way by providing flexibility to thermal generators to replace their brown power with green power, introduction of RE aggregators, and connectivity to RE generating capacity of 50 megawatt and above. This will deepen green market at the exchange in future. Additionally, Ministry of Power extended the time period for Section 11 directive to imported coal-based power plants up to 30th June 2024 to enable supply from imported coal-based power plants in the system and to counter anticipated surge in demand in the upcoming summer months. The Ministry of Coal has amended the Shakti policy in November to allow power plants including power generators without PPA to sell power in all segments of the power exchange. Earlier it was only limited to the DAM market. Now they can sell power in all segments in DAM, RTM and the DAM market. The CERC issued its order for increasing the frequency of REC trading on power exchanges twice a month. Earlier it was once in a month only, and have allowed fungibility of different types of RECs. Consequently, with the added flexibility and increased frequency of trading, liquidity has increased in the REC market, and because of removal of REC base price, REC prices have come down Earlier, the base price was 1,000 rupees, so transactions were happening at 1,000 rupees. Now, with the removal of the base price, the REC transactions are now, last transactions were at 360 rupees per REC, significant reduction. And as a result of that, REC volumes also increased on the exchange platform. It was 65% higher in Q3 in comparison to last year. She has finalized the phasing plan for thermal plants to bring their technical minimum operations up to 40%, which is currently 55%. This move will help in adding more RE capacity and efficient integration with the grid. Ministry of Power has provided repowering of life extension for wind power projects, allowing such generators to supply excess power on power exchange. All these measures will lead to a further improvement in cell liquidity on the exchange, leading to a decline in power prices. This is expected to present an opportunity for DISCOMs and commercial and industrial consumers to optimize their power procurement cost. Friends, during the quarter, IEX undertook significant initiatives. We are honored to be a part of the groundbreaking Green Credit Program launched by the Honorable Prime Minister during the recently concluded COP28. Our wholly owned subsidiary, International Carbon Exchange, was engaged for the development of Green Credit Program Registry, Trading Platform and Web Portal. On our core business, we are awaiting approval from CRC on our petition for extending the term ad contract from 90 days to 11 months to provide better opportunity for our DISCOMs. In terms of business performance, IEX achieved 28.3 billion units of traded volume across all segments during Q3 of FY24, growing 16.8% on year-on-year basis. This volume includes 25.9 billion units of conventional power and 0.4 billion units from the green market segment. The exchange also traded 20.3 lakh certificates, which is during the quarter. Our gas exchange, IEX, has celebrated its third anniversary in December and has since inception cumulatively traded more than 900 lakhs MMBTU in gas volumes. During the quarter, due to wide variation in demand and supply of gas, IEX traded volume declined 65% on year-on-year basis to 84 lakh MMBTU. However, on 9-month basis, IEX volume was down only by 7% from April to December. The profit after tax for IGX for 9-month period increased by 14% from 16.3 crore in 9 months of FY23 to 18.6 crore in 9 months of the FY24. As gas prices continued their downward trend, volume at IGX will pick up in the going forward. And I'm sure in this summer month, with the operation of gas-based plants, our gas exchange will have better opportunity. Let me now summarize the financial performance of the company for this quarter. On standalone basis, the company recorded a PAT growth of 25.5%, increasing from 71.2 crore in Q3 of FY23 to 89.3 crores in Q3 of FY24. On a consolidated basis, revenue for Q3 of FY24 increased by 20.3% on year-on-year basis to INR 141.2 crores from 117.4 crores in Q3 of FY23. Consolidated PAT during the quarter came to 91.8 crores, higher by 18.9% on year-on-year basis. For fiscal year 2024, the Board of Directors of the company have announced an interim dividend of 1% equivalent to 100% of the face value of the equity shares. With improving coal production and inventory and easing coal and gas prices, we expect rationalization of power price on the exchange and volumes to further improve in the coming few months. As India looks forward to add 20 gigawatt thermal capacity in this financial year, thermal generation will increase by almost about 10%. This will lead to increased cell liquidity on the exchange. With the CA expectation of power demand to soar above 256 gigawatt in FY25 and improved cell liquidity, I am sure exchange volumes will continue to increase. Thank you, friends, and now we can have question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good evening, and congratulations on a good quarter. So, first question is on the new GNA regulation that kicked in from October, I guess. So, have you gained any market share after the new GNA regulation kicking in? And can you please quantify market share in Q3FY24?
Yes, our market share for quarter 3 has definitely improved, if you compare with quarter 1 and quarter 2. As I told you that DSE volumes have reduced. If you take all the 3 exchanges together, then also there is a significant reduction in the trading volume in the DSE, and that quantum has shifted to the DAM market and RTM market.
Is it possible to quantify the market share?
Yeah, Mr. Rohit?
Yeah. So, in the month of November and December, our overall market share was 91%. December, it further increased to 95%. If I talk about quarter as a whole, it is little below 90, about 87-88%. So, we have seen significant improvement in HT. I'm talking about total, including certificates.
Including certificates, yes.
Yes. So, if I talk about electricity, in December it is 97%, 96%. So that way we have seen significant improvement in the market share with the correction of volume in DSE and movement from DSE to day-ahead market.
So the second question is on the surplus. You said that the cost plus power plant can sell into exchanges. So this has been in talks for last few years. Has there been any change in the particular quarter in the sense the government has come out with a new regulation, new notification? Which you believe can increase the liquidity on the exchanges because of this particular, can you please comment on that?
Your question is not clear. Can you please repeat?
Yes, I'll come back. So the unacquisition surplus, which you mentioned, so this has been in talks in the sense the government came out with the first regulation maybe a couple of years back, and it never helped us. So what has changed in this particular quarter?
I got your point. See, earlier, as per the earlier systems and processes, the consent of beneficiary was required by a generator for offering the power on the exchange platform. Mm-hmm. Now, under the GNA and the new electricity grid code, the consent of beneficiary is not required. So a generating company, if the URS power is there, they can build that power on the exchange platform without obtaining the consent of the beneficiary. So this is a significant change in the electricity grid code itself. Further to this, Government of India also has now issued a draft rule wherein they have said that the generating company must offer that power on the exchange platform, and if they fail to offer that power on the exchange, they fail to submit sell bid of that quantum will not be counted towards their fixed cost recovery. I mean, maybe for the DC computation, which will impact their fixed cost recovery. So, because Government of India wants that, the liquidity in the market should improve. And I'm sure these rules are going to be finalized maybe within this month. And already we have started seeing volumes from the generating companies, the URS power getting bidded on the exchange platform. So the sell side liquidity has improved because of that.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you very much. The next question is from the line of Guy Spear from Aquamarine Capital. Please go ahead.
Thank you very much. Can you hear me?
Yes, I can hear you.
Thank you very much. I think the whole of India should be grateful for the extraordinary work that India Energy Exchange is doing in facilitating the provision of electricity to the whole of India, and I think you're an amazing team. I wanted to get your update on the comments procedure for the Central Electricity Regulatory Commission, where they are in their discussions with the Power Ministry, and if the Power Ministry eventually takes a decision on market coupling, when your best estimate is of when they will take it. And I would imagine that if they decide to go there, there's going to have to be a lot of discussions on exactly how to implement it and what the market procedures will be, and even which contracts they might start working with first. I can't imagine they would do it all at once. So I'd love to get your take on where that is, where your discussions are, and how you see it unfolding from here. Thank you.
Yeah. First of all, thank you very much for complimenting. And with regard to market coupling, let me first tell you the events which have happened. I think in the first week of June, there was a letter from Ministry of Power for implementing market coupling to CRC. CRC issued their discussion paper in the month of August, and they invited suggestions on that, and almost about 127 persons submitted their suggestions, comments. And in that also what we find that more than 70% persons, they were not in favor of coupling. If you look at all these comments are posted on the CRC website, you can have a look at yourself. All eminent persons of the sector, experts of the sector, they have opined that market coupling will not bring any value in the market. And the need of the hour is basically to improve more liquidity in the market. In the present arrangement, there are three exchanges. These three exchanges are competing with each other. So if you do the coupling, it will stifle the competition and innovation. So based on the comments received, I'm sure there are few comments where the alternate options were suggested. So what we understand is that CRC is now also exploring, analyzing the alternate options given in some of the suggestions, and maybe at the appropriate time they will take a view on that, whether there is any merit in implementing market coupling or not. So I will not be able to give you any time frame when CRC will take a view on that. After CRC takes a view on that, then also the process is quite long, because they will come out with a draft. They will discuss on paper again on the new concept and then take comments on that. They may come out with a draft regulations, finalization of the regulations, development of software, and laying down the settlement mechanism. I mean, doing the mock drill for that. So it's a long-term process.
Yeah. Thank you so much. And I would also, just to confirm, I would imagine that developing that new system, if it ever comes about, would be with the involvement of the existing market players to ensure that there is energy continues to be traded smoothly. So you would be closely involved in the development of that system.
Yes. I mean, whatever is done by CRC, that is in a transparent manner and with the involvement of all participants.
Yeah. Thank you so much.
Thank you.
And thank you for your great work. You're a great Indian institution, and I'm proud to be associated with you, as you know. Thank you.
Thank you. Thanks a lot.
Thank you very much. The next question is from the line of Ankit Kanodia from SmartSync. Please go ahead.
Thank you for taking my question. My question is again related to market coupling only, but just slightly on a different note. So in our call, we have been very clear that if market coupling comes in, it would lead to death of innovation in the market, right, in the exchange market. So, but we see some of our competitors celebrating market coupling. So can you throw some light as to how can market coupling be beneficial for one player and not beneficial for others?
So the point is, I will always tell the side of the story which suits me. And same thing is true for the other exchanges also. That is why there is a regulator. regulator is independent body. They will take a view considering what is good for the sector. And that is why they issued the staff paper. And in the staff paper, if you see, the suggestions received are not only from these 3 exchanges, the suggestions received are 124. There are other 124 participants who have made comments on that. And these include sector experts. You can say they're members of the CRC, ex-members of the CRC, ex-member, chairpersons of CRC, Central City Authority, ex-members of the Appellate Tribunal, ex-secretaries of the Government of India, ex-regulatory commission, state elected regulatory commission chairmen, and maybe IIT, from IIT and IIMs and NGOs. So all those persons, comments on that. Please have a look at those comments. You will yourself will be convinced that market coupling probably will not add any value. But anyhow, we have to leave it to the regulator. They have to decide about it. It is their prerogative to decide what is to be done in the market. But I can only tell you that implementation of market coupling is a major change in the market design. So I'm sure regulator will take a view considering all aspects, and then implementation of that also is a long-term process.
Got it. Thank you so much for that detailed answer. My second and last question would be related to the international carbon exchange which we are planning. Can you give us some color as to where we are in that, and how do we see that shaping up in the next couple of years? Any qualitative and quantitative details you would like to throw up?
Yeah, in the international carbon exchange, I think we are still working on that, because the transactions are basically mainly with the Indian sellers and international buyers. So these are going to be, dollar-rupee transactions, and it is difficult to facilitate these kind of transactions on exchange platform. So we are now exploring the option with the GIFT City to launch this exchange from the GIFT City so that we can do dollar-dollar transaction. And we had a couple of interactions with the GIFT City officials, and they are also very supportive of this. Let's see if it materializes in the next couple of months.
Okay, so maybe in FY25 we can expect some transactions here, some notable transactions.
We are desperately working on that, and we intend to launch that as soon as possible.
Thank you so much, sir, and all the best.
Thank you.
Thank you very much. The next question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
So thank you. Thanks for the opportunity. So in your initial remarks, you mentioned about the fungibility of REC. So can you please explain what exactly you mean by that?
Yeah, earlier in case of REC, the RPO obligation was separate for the solar, separate for the wind, separate for the hydro. All those things were separately specified. And as a result of that, some states, the inventory for the REC, inventory for solar was higher, wind was lower. So there were problems in that. But now with the fungibility, after creating fungibility, all RECs are in one category. And there is a multiplier effect based on the technology. So now the obligated entities can buy that REC to meet the requirement. There is all the obligations are again combined together. So they can, that has basically increased liquidity in the sell side and also made it simpler for the distribution companies to meet their obligation.
Understood. And so, would you be able to also mention what will be the industry-wide, like the system-wide inventory level for RECs as of, say, on December?
Pardon?
At the system-wide inventory level of RECs.
Yeah, inventory is very, very high in the market now. It's almost about 2.5, more than 2.5 crores RECs are there in the market. See, now there is a mechanism that even distribution companies, if they have renewable power at their disposal, which is more than their RPO obligation, they also can get RECs. So as a result of that, there are distribution companies like Karnataka, Telangana, Andhra Pradesh, Himachal Pradesh, they also have RECs, and then the generators, REC renewable generators. So the combined REC volume is quite significantly high.
Okay. And the last question, what were the long-term volumes in Q3? Long duration TAM, basically.
Rohit, long-term, LDC volume. So in Q3, this volume is about 3 billion units. So nowadays, every month we are doing close to 1 billion unit trade in longer duration contract. So total in 9 months, we have done close to 7 billion units, which have picked up in the later months. And if I compare it with the last year total in complete year itself, we did about 2 billion units. So there is a massive increase in LDC volume.
Okay, sir. So, and should we expect that in Q4, ahead of the summer season, this volume can really spike? Because most of the discounts would like to acquisition power for the summer season.
Yes. So there is a lot of interest now, and you rightly said, because for the summer season there is a visibility that probably there is going to be a deficit again. So many of these distribution companies, they want to come to the market at this point in time and lock their procurement for the coming months. So we are working towards achieving even better numbers in months to come.
Okay. Sure, sir. Thank you and all the best.
Thank you.
Thank you very much. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thank you. My question is in relation to the flurry of firm dispatchable RE tenders that we have been seeing over the past few months. Basically, as the electricity storage solutions evolve and this becomes more and more prominent, what implications does it have for the volumes that come to the short-term market and particularly to the exchanges? And also, if you could combine this answer with the opportunity that you see with the RE capacities that would be set up for green hydrogen over the medium term, again, what could be the quantum of associated generation that, if possible, could come to exchanges?
See, first of all, let me tell you the basic principle. Renewable energy generation capacities, there is a lot of variation in that. There is a lot of volatility in that. Whereas demand is practically fixed. So buyer will have to have other sources of power also to meet the demand. And it is seen that the countries where renewable generation capacity has increased, the exchange transactions have also increased, because on the exchange platform, you can do integration of different resources in a more efficient manner. So, I would like for the storage capacities, the battery storage system or the pump storage system, there the cost of generation is going to be higher. And exchange can provide that high price during the peak hours. So, I am sure with higher renewable energy capacity and the storage systems, the exchange will be definitely a preferred option. Even the Government of India is talking about the storage capacities under the viability gap funding system, and there also the mechanism being explored is that the sale of power is at least on the exchange platform during the peak hours, so that the maximum realization of revenue can happen on that.
Sure. And so basically, if you look at the period FY22 to 1H FY24, the share of exchanges has not really increased in the total power consumption. It's gone from 7.4% to 7.1%. The overall short-term market has also stagnated at around 13.6, 14%. In the next 4-5 years, based on how renewable penetration is going to increase, how do you see the share of short-term market going up? What is going to drive that? And how is the share of exchanges within the mix going to increase? Maybe a 3-year time frame.
It is very difficult to say about what is going to happen in future, but I can tell you in the past, if you look at the last 5 years, our volumes have increased at a CAGR of, I think, more than 16-17%. And I'm sure with the high renewable, this number will be further better.
Sure. So you had mentioned that, in European markets, already you have renewable capacities which are, coming to the market under the
See, let me tell you one thing. In case of the European market, they have a market framework even at the retail level. So competitive framework at the retail level also. So I think their model is more competitive, and exchange transactions are more in those countries. So, but the trend is that with the high renewable, exchange transactions also improve. The share of exchanges increase significantly.
So are we seeing more renewable capacities being set up on a merchant basis now in the next couple of years?
Not necessary. We have seen states having high renewable at their disposal under the PPA.
Yeah.
They sell more power during high renewable generation period.
Yeah.
And there are disposal companies who buy that power.
Got it. Thank you.
What is required is we need to have capacity addition in the sector.
Yes. So for time of the day, requirement of making power, especially during evening peak hours, exchanges could prove a very important tool to manage that situation.
If you look at our real-time market, the real-time market volumes have increased to almost about 30 billion units now. And the share of real-time market is increasing. It is mainly because of these things. That with the renewable capacity addition taking place, there are participants who are selling power on the exchange platform whenever the renewable is high, and there are other participants who are in need of power, they buy it.
Thank you so much for answering my question.
Thank you very much. The next question is from the line of Sagar Vijay Shah from Shah and Company. Please go ahead.
Hello.
Yes,
Hello.
sir.
Yes.
Yeah. So yes, sir. So thank you for the brief insights on the quarterly update on the results. So I was just going through the replies which the members have commented on the staff the report which the CRC has asked for. So I was going through the IEX reply also. In that, the company has mentioned that this may be unconstitutional as well, and this because the objective of giving the license to IEX is also based on some sound principles, which if the market coupling is happening, then it is violating and it may be unconstitutional. So if you can just throw the light on that.
I think our suggestions to CRC are very detailed and they are self-explanatory. I will request you to kindly go through them, and you can, I'm sure, get more clarity from the suggestions by reading the suggestions. I don't think those suggestions are, I think, in 30 pages, and I'll be able to detail them out on this call.
Mm-hmm.
Thank you.
Thank you very much. The next question is from the line of Balani Vijay Kumar from Avendar Spark. Please go ahead.
Good evening, sir. This is Balani from Avendar Spark.
I'm not able to hear you.
Is it audible now?
Better.
Yes, sir. So my first question is on our GTAM and GDAM volumes. Like, can you elaborate the reason why it is on a declining trend this year compared to last year, the volumes from GDAM and GTAM?
Yeah, in the green market, see, we do not have significant merchant generation capacity in the green area. Mostly the green power sale was coming from distribution company who have green power beyond the RP obligation, and more from the Karnataka. This year, the Karnataka demand there was a significant increase in the demand, almost about 30%. mainly because that the rain shortfall was there in Karnataka during that time. The wind generation happens earlier, they were selling that power. This year, their own consumption was high. So the sale was less on the exchange platform because of that. Otherwise, as far as the demand is concerned, there is a huge demand for the green power, and the premium over the conventional power in the green market is also almost about 40-50 paisa per unit.
Second question is on the recent some developments on open access where and on the revoking or repealing of any license requirement of transmission for renewable projects or any new projects to be set up by the developer. So how are all these things having a positive impact on our open access volumes, if any? Or will it have any positive impact in the future?
All these things are basically for development of the market and development of green energy in the country. So, and as I told you, anything which leads to capacity addition in the sector is going to be positive for the exchange also. So, these things will be positive, but let's see about the implementation of this, because these kind of things will take time for implementation and seeing the result of that. These are all futuristic issues.
Okay, got the point. Thank you so much and all the best.
Thank you.
Thank you very much. The next question is from the line of Devish Agarwal from IIFL Securities. Please go ahead.
Good evening, everyone, and thank you for the opportunity. My first question is on the long duration contract. So, if you see, one of the benefit of exchanges was lower prices compared to the bilateral market, and that has been driving the move from bilateral to exchanges. On your new contracts that you are seeing in the LDC, can you give us a comparison in terms of prices that we are seeing in the LDC market versus the bilateral market?
I can only tell you one thing, that the practice which distribution companies are adopting is, they do a tender on big platform, and also for that, they have some time available to give their consent. During that time, they run the auction on the exchange platform also, and invariably they find lower rate from the exchange and they get into a contract on the exchange platform. So on case-to-case basis, it is very difficult to give you a comparison for each of, because these are different tenders coming out at different places, but definitely exchange prices are lower.
But any range, sir, can you say that 10 to 20% could be the difference, or even that will be difficult to see?
10 to 20% is a very, very large number what you're talking about. This is normally, you can say, about 20-25 paisa per unit.
20-25 paisa per unit.
Yeah, okay. Maybe which is about 3-4%. See, a generator is giving a competitive rate on the exchange platform because he is getting payment on daily basis. So his working capital requirement is less, and he is basically saving cost there in that. And then he is assured of payment. So that is why a generator is offering competitive price on the exchange platform.
Right. And sir, if you did mention about the incremental supplies coming from the imported fuel projects, but if we just want to understand better over the next 2 quarters when we will see the peak demand, what is your sense in terms of how much incremental supplies can come from which segment, which can help us meet the demand and drive the exchange volumes based on your past experience?
See, number one, last year also, Government of India has given direction for the imported coal-based power plant to run. But last year the coal prices were itself very, very high. The variable cost was something around, during this time of the year, March, April, I think it was about 8-9 rupees per unit. But now the coal prices have come down, so variable cost is only about 4 rupees, 4.5 rupees per unit. So I'm expecting the imported coal-based power plants to run at the full capacity, which is something about 10,000-12,000 megawatt. That capacity is going to be available. And another thing is the gas-based power plants. Gas rates also have come down. I was seeing today the West India market is about $9. It is expected to, the futures of the LNG are being traded for the month of March at $7 to $8. So if it comes down to $7, the variable cost with LNG will be only about 6 rupees. So today we have 25,000 megawatt of gas-based capacity. Out of that, almost about 12,000 megawatt is on bar. So that can start generating power. So this is lot of capacity. 12,000 megawatt of gas, 10,000 megawatt of imported coal, and also the new generation capacities are under construction and commissioning. So we are expecting by March, even almost about another 4,000 or 5,000 megawatt capacity will get added. So taken together, this summer things should be comfortable.
Understood. And sir, on REC, we've been seeing that the prices have corrected significantly versus what they were earlier. Does this pose any risk to our exchange tariffs?
Yes. Exchange volumes have significantly increased in the month of December. I think third quarter our volume was 65% with respect to third quarter of last year. 65%.
No, sir. In terms of tariff, I'm asking the tariff that we charge at 40 rupees per certificate. Given that the prices have come off significantly, is there any risk to that 40 rupees or no risk to that 40 rupees?
Let me tell you one thing. We were charging the same tariff when the REC rate for the solar was 2,500 also. Okay. So the exchange fees is same. It is not price sensitive, because if it is price sensitive, then we will always like to have a higher price, which is not in the interest of consumers. It is a fixed fee.
Right, sir. Perfect. Thank you so much.
Thank you.
Thank you very much. As there are no further questions, I will now like to hand the conference over to management for closing comments.
Thank you, friends. I would like to thank each one of you for being part of today's call. Throughout the quarter, we witnessed a number of efforts announced by the government and regulators aimed at establishing a favorable policy and regulatory climate to develop the energy sector. We remain committed to contributing to the development of a sustainable and efficient energy futures. Have a wonderful evening. Thank you very much.
On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.